All right, good evening, Ken at Tortoise Capital. It is the nightly strategy podcast for Monday, February 22nd, 2021. Let's get into it. So today started decisively down with a big gap down to about a new 10-day low. It then featured a morning hook and a run all the way back up to the edge of the river in the southern skin of the dragon, and then collapsed in the afternoon, came all the way back to the opening with a very ugly looking daily price candle here, the price bar. Resting on a new 10-day low, inches above today's PSAR, and just about at tomorrow's PSAR is right at the new low of the day. So we're on the edge of the cliff looking down. Slope of the PSAR still grinding up. The RL30 health is rolling over. The RL10 has now into the fourth day of crossing the baby dragon and rolling over. And the RL10 has come through the southern skin of the dragon. So we have an RLXD condition. There's RL10 price. The 10-day high to the 10-day low is about 2% stretch. 30-day high to the 30-day low is about 6.5, but you can see how that's backward looking, and this is forward looking. So we're still in the land between the rivers here, between the PSAR and the 30. So this is kind of no man's land, but we're right on the verge of breaking the PSAR, a new 10-day low, a 2.5% sell-off, which is just a fraction above the Bollinger Band mean. So you get this real cascading rollover effect. This was much sharper, and it was a sudden shock down to the 30-day low. This has been much more orderly progression, but still, this was not an auspicious start to the week. Featured Yellen trying to talk down Bitcoin, and the Fed and the Treasury are making some noise about it, an alternative to Bitcoin that is much less energy intensive and more efficient as a method of transaction. So something like that could really challenge Bitcoin as the preferred crypto coin for a lot of businesses, especially if the government starts leaning on big businesses to transact in it. And all along, I have been concerned about Bitcoin being ruled out for commercial use by a stroke of the pen. It's always been vulnerable to that, and that's still in play. So there's a certain amount of fogginess about Bitcoin's future. We'll see. So we are definitely all hands battle stations. On the positive side, this really did offer some amazing trades intraday for the turbo traders, which we will look at here in a second. All right, so we had the S&P today down 0.75 at minus 0.77. Treasuries were the same, minus 0.76. The Russell was fractionally better at minus 0.65. The diamonds were the best performing U.S. sector at 0.09. DWCPF, that is the completion index, that's the smalls and the mids grouped together, is minus 1.73. Let's see, the Qs were down 2.6, and emerging markets down 3%. So it's still the U.S. leading the way, and with the Dow leading the way today, the protection of large caps, if you will. Let's take a look at the things that worked. So we had Japan and healthcare only down a quarter. Had discretionary basic materials and finance up. Finance was up 0.9, materials up 0.4, staples just cracking zero there. Simon Property Group, the commercial real estate up 3%, as was oil, exploration, and energy, 3.5%. Silver and oil up 4%, VIX up 4 and a fraction. And then the big three winners today in terms of performance of individual companies. We framed these last night. Alcoa up 7.2, Wheaton Precious 5.6, U.S. Steel 5.4, Cliff, Caterpillar 3.9, Cliff 2.2, Devon 2%. So these great American material and energy companies just crushing it, while the disruptors all suffered today. All right, things that underperformed the S&P, Mexico minus 1.73, marijuana minus 1.8, consumer discretionary minus 2.1, S&P Tech 2.2, FANGs 2.7, S&P Bio 3%, the blockchain 4.25, Mark Genomics 5.3, Bitcoin itself 5.6, Clean Energy 5.7, ARC Innovation 5.8, Brazil 6.2, Ethereum 13%. And the disruptors got a little disruption today. Tesla down 8.5. If anybody doesn't think that has cracked, you'd be cracked. Has fallen from 880 to 714 in a matter of a couple weeks. True believers are going to believe. Virgin Galactic and NEO down 7.9. PayPal 4.6. Square 3% in the financial disruptors. Lithium 3.2. Well, that should be a red box. Oops. I had high hopes for Apple. It reversed and went the other way, down 3%, as was Microsoft 2.7 and Twitter 2.5. So all of the fancy disruptors just getting smashed, and only the good basic material companies, people that make things, got it done today. Let me go through the report, then I'm going to come back to some opportunity trades. Because they were very instructive today. Okay, so we've seen the health check. Let's go to the dashboard. So we are in bullish quiet still. Overbought on 30, 90, and 270. Sharp sell-off today in the 10 and the 2. We are white bullish now in percent stretch, so we've pulled back a considerable amount. ADX is still weak at 14.5. ATR quiet at 1.1. The risk index is still giving us potential for swing trades to the upside, but clearly rolling over at 1.0. So here's my concern. That one followed by a second step down. Finally have come out of the overbought conditions on the 10-day. Russell is the first index to tip into the channeling signal, the buy on dip opportunity. Familiar names here in the 10-day max pain: Walmart, Cisco, Apple, Disney, Walgreens, Min Pains, Morgan, Coke, Procter, Nike, and Home Depot. So Home Depot ought to be a place of safety. Tesla getting smushed here. That's the technical term, smushed. In the Dow tactical summary, only 3 dojis today. Lots of volatility and directionality. Only JP Morgan had a great day, I would say. Home Depot broke out on a 10-day. Walmart continuing to suffer with breakdowns on the 10-day, 1 month, and 3 month. It was also of interest. It's a channeling and overreaction and a max pain at 2.6 to 1. So that's worthy of attention. I would say also Apple. Channeling and an overreaction and a 551W, and tests out at 2.9 to 1. So I guess Cisco's always interesting at 3.6 to 1. ETF 30. ETF 30 tactical, only 2 dojis today. No breakdowns in the NDXs. Let's see, gold at 3.5 to 1. Russell small caps 2 to 1. Real estate 2.4 to 1. Metals and mining and oil exploration and energy suffering today. Lots of opportunities, as you would expect, in the auto framer because we're starting to pull away from that 10-day high now. So defensive plays in here, just to me, Walmart, Cisco, Apple, and Procter all look interesting. In the globals, emerging markets in Brazil at 2.7 to 1, and S&P technology at 2.4 to 1. Microsoft 2.1. So there's your framing data for those mechanical trades. Daily squeezes, only a handful today. Amgen continues to tease at 3 to 1. Walgreens 2.6 to 1. Procter at 3.1 to 1. SPY itself at 1.9. Interesting, when it's close to being a squeeze, what that really says is even though it was threatening on the downside, the actual daily range was small. Most of that loss was in the gap. Apple and Microsoft also stand out to me whenever they're on that list. Still being dominated by the summer plays in both the ETFs and the Dow 30. Let me let that come up on your screen. And I'm going to favor these ones that are early in the earlier in their summer, so like Morgan, Home Depot, Johnson and Johnson, emerging markets in Asia less Japan. In the multi-time frame NDX, Walmart continues to suffer from that bad earnings report, so they should be washing out and becoming a value play here at some point soon. Favorable moves today in Honeywell, 3M, Visa, and McDonald's. But solid performance here, Morgan and Home Depot, among the strongest of the strong. Only utilities in the green here for the ETFs. Consumer discretionary close to it at 96. But lots of weakness everywhere. All that red that you see, that's just things starting to break. The slope of the 10-day regression line continues to fall. We are just touching the edge of the upper edge of the river now, and we for this to be a full correction like these previous two iterations, it's got to come all the way down through that yellow river here and to get to the red line. So still an orderly rollover. No signs of panic yet. All right, that's everything I want to cover on the daily. I do want to show a couple opportunity trades here. So the first one was in blockchain, and Bob and I exchanged some emails this morning. And based on pre-market conditions, we looked at, this was the warning on blockchain. This is where it was trading below the RL10 cut line pre-market. And so it was gearing up for a big sell-off. And that was enough to get, Bob's attention for us to say, hey, maybe this looks like it's cracking. And sure enough. So the first play of the day was this one. And this was the big sell-off, found support, and I took a position here on the 1, 2, 3. At 57, with the usual risk box just drawn right below. So basically $1 of risk. And then by this time, about 4 minutes later, get that risk out. And lock in a piece. So now the next thing that I'm looking at is I'd really like to see this thing get across the dragon and be nice if I could get it all the way to the VWAP. That would be nice, because that would be about a 4R if it can get to the VWAP. Couple bars later, it gets to the spine of the dragon. I'm sorry, that's grayscale. A couple bars later, it gets to the spine of the dragon. I get a RLXD second entry here. I'm not offended if you wait for the winter to turn to spring, or if you waited to see some confirmation. But between somewhere in those 3 bars, you've got to get your second position on. Remember, our first position was this 1, 2, 3 here. Take another position here when it crosses the Bollinger Band mean. And I'm still looking for it to get up here to the VWAP, and then really back to the long-term fair value. And then we really want to get it all the way up here to close that gap. So that's like about an 8% initial gap down. And now by this time it's only down, that's almost like a 5% move right there. It gets through the RL270. It almost closes that gap. It gets back to like the Z3 break. So this is where it closed yesterday. And now this is really the first sign of any kind of getting full, feeling full. So at this point, with 3 positions in, I got to get a stop locked in like right about here. I'll give it those 2 bars a pullback, but nothing further. It powers on through there and gets through yesterday's closing, and I was actually in the green for a while. So here I'm just tracking with a 2-bar low, and now we've got 4 positions in on this thing. There's our 1, 2, 3 entry. Here's the RLXT or the SSC. Here's the crossing of the Bollinger Band mean, and then here was the crossing of the RL270. So by this time, we've got to have a pretty tight stop in. And this first entry down here was around 57. And so now it's tracking 62. So that's about 5R on the first one, maybe 4.5 on the first one. And this one is about 4, and this is 3, and that's 2. 4, 3, and 2. So that's about 12R on that one. Just getting back to where it closed yesterday. So this is an opportunity to play turbo. Now, what was concerning here, or kept me on our toes, was that the primary Bitcoins were not having this kind of recovery. They had little bumps, but like Bitcoin and Ethereum were not returning this kind of move. So this one felt very fragile, and shortly thereafter, we do get that exit in here. And now it was a question of new set of tactics and clear the deck and start fresh and reframe. And when you do, you say, all right, this thing is starting to roll over. This thing ends up coming back all the way to the VWAP later that day. So that move, you would end up seeing, with the rest, it's going to be that kind of move where it's given back about half of this positive move here. So there was this move, second leg, and this felt like 3 legs up compared to that first big sharp sell-off. So blockchain had most of my attention today because that was working really well, and the other disruptors just didn't get any money, and our stops protected us against excess losses there. So we've raised a bunch of cash. We use the intraday volatility to protect the longer-term blockchain position and to put some money away. So I think tomorrow is going to be more fireworks like this because of the week close. If we fire up, I did want to show some of these other ones. So like this is the intraday on Alcoa. Go back and listen to yesterday's framing of Alcoa, and this was the tight yellow box that we get that breakout. Now here's the open. Here's where it enters that testing zone, and it follows through there pretty nicely. And then it's as orderly a trade as you could want. And if that little dip gets you out here, then the COTA 2 should get you in with another COTA 2, and then it's free running. And yesterday we talked about it might have legs to get to 24. Well, it did, and it ended up getting even better. So there was quite a move in Alcoa. Also a nice move in U.S. Steel from the open. That whole materials sector and the metal sector was good. Cliff gave a nice Z3 breakout, but once it got into that congestion zone, really couldn't hold it. So Alcoa was the move of the day. But everything else was looking pretty sad. Tesla, very little conviction, and I think a bunch of people pulled the plug on it there at the end of the day. So there will be people that looked at Tesla at 850 and couldn't pull the trigger on it, who are now looking at it down around 700. And at some point they're going to say, well, maybe it's time on to buy Tesla on sale. But you can see Tesla has completely fallen out of our value boxes, our trading boxes. And now I would say this one tomorrow should be of great interest to you. New low of the day, and then just a recovery above, call it today's Z3 line. So that one should be of interest. Yeah, clean energy has completely broken as well. It's below that key 120 level and also failing. So that's breaking out of that box to either get to, back to the, back here to 120, or all the way down here to 100. So PBW has cracked. Apple was a disappointment. I thought that we're going to see a value play in Apple here pretty soon. But in fact, it's now challenging this box here, the support box. So now, if this breaks at 126, the next target I think is like 120. So I think you would want a second position right about there. So first position on the breakdown right about there, and then second position pretty quick. Then on the upside, it's we're aiming for a return to the Bollinger Band mean at about 134. So this tight box was resolved to the downside. So now we'll see how it breaks from here. So lots of opportunities, in my view, on some of these key market players. All right, that's everything I got for you. Let's get cracking. Oh yeah, Ken mentioned Devin. Wanted to talk about that one too. Yeah, Devin was great from a hybrid frog perspective. Yeah. Anytime that you can get a move like that early in the day, in the first 90 minutes of the day, so you're getting an entry somewhere around 2130 or 40, and then having a relatively smooth rise to the top, really. So you got a gap up, and that's a 1, 2, 3 entry there, and a hybrid frog entry, and there's a spot in here to get a second entry on a Kata 2. If you don't get that one, then the Z3 breakout here, where it breaks out from the Z3 pinch, should get you in there pretty nicely. So it's nice to get, especially while the rest of the market is suffering. That's why I really like these mid caps that have a very narrow business focus, like Devon and Cliff, and Wheat and Precious Metals also. They're just so focused and concentrated that they make a very clear argument to own them when they're moving. Okay, that's everything we got. Take good care. We will see you in the chat room tomorrow. My son and I were working on a math problem over dinner. We went out and grabbed some Thai food, and it was, if you have 10 six-sided dice, what's the probability that 3 or more have a score of 3 or higher? Right? So I have 10 dice, I roll them all, and I want to count the ones that have a score of 3, 4, 5, or 6. What's the probability that 3 or more have a score of 3 or higher? So we were squirreling around with how to solve that. I'm going to go run a Monte Carlo simulation to check my intuition. All right. We will see you tomorrow and leave you with that story problem. Off we go.